PayPal, a stock that needs no introduction, is down a further 18% since last month, adding to the almost 80% decline in price since last year. This is a great example of how the psychology of investing plays a much bigger part in a stock's performance compared to the fundamentals. Now, in my previous update on PayPal, I did look at the fundamentals. PayPal is a giant of a company. It is sound in terms of its figures on its books. PayPal will no doubt recover from this most likely embarrassing fall from grace, but PayPal is not alone. The tech sector as a whole has taken a real beating as investors have not been able to dump their shares quick enough. When the fear kicks in, the herd mentality can show its brute force and why it is essential to have a pre-thought out exit management system such as a well-placed trailing stop loss, which is our preference here at Sublime Trading. In today's recording, we're going to revisit the chart of PayPal, have a look at where price is currently trading, and if PayPal is a good stock to buy in terms of the overall market conditions. I'm also going to show you a stock that is currently outperforming the market. We're going to compare that to PayPal, and one that you may want to consider instead of PayPal. So if this recording helps to up your investor game, don't forget to like, subscribe, and hit the bell notification. My name is Zahir Anwari. I'm the co-founder of SublimeTrading.io. We have helped hundreds of private investors over the past 10 plus years profit from trends in the markets through our simple to learn methodology. I also write for a number of publications including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stock's performance, focusing on the next 3 to 5 years. Okay, so let's switch over to charts and have a much closer look at PayPal and also this lesser known stock that is outperforming the market and outperforming PayPal. Let's switch over to the charts. Okay, so this is a typical 3-screen setup of mine. I have the monthly in the top left, the weekly in the top right, and the daily time frame down here across the bottom. If you're new to this channel, welcome. I'll give you a brief breakdown. If you're a regular, you'll already be familiar with this 3-screen setup. We have the monthly in the top left, the weekly in the top right, and the daily time frame down here across the bottom. The monthly time frame is where we start our analysis. We then go down to the weekly and then down to the daily. Notice we don't go further down than the daily time frame. The daily time frame is the lowest time frame that we use. Now, the reason why we use the higher time frames is because it gives us a very clear picture of the performance of the asset. So if it's performed well in the past, it's very likely to perform well in the future. It tells us very clearly what the asset is doing right now, and it also helps us to build a picture of what the asset is likely to do going forward. You cannot do this on intraday time frames. When you go down to lower time frames, this is where you get into that get rich quick mentality, that gambling mentality, and ultimately where it all goes wrong. We have to always stay true to the principles of good investing, which is to think long term. And that's really where the higher time frames come into their own. And remember, guys, when you play the longer game, you allow yourself to compound, and compounding is really where you get multiples of growth on your account. Okay, so let's start with PayPal. Now, before this decline, we can see that PayPal has a very, very good history of performance. Since its IPO, which was around that $40 mark, it went on to create a high at around $310, so a significant increase in price. However, it created that high in July of last year, and since that high, it has just tanked and it has fallen 80% to current price action, which is around the $70 mark. As I already mentioned, PayPal is not alone. The tech sector as a whole has taken quite a beating, but PayPal is definitely one of those stocks that has taken one of the biggest beatings in the market. It has fallen significantly, certainly as a tech stock. If we look closer, it's trading below the low of last year. So this is the high of last year. This is the low of last year. It broke through the low of last year in January of this year, and since then it's just been in free fall. If we move across to the weekly time frame, price is below the 200 simple moving average. Now, if you're a regular, you would know that we're a big fan here at Sublime Trading. We're a huge fan of the 200 simple moving average in order to determine a bias. If price is above the 200 simple moving average, it has a bullish bias, and that's really where you want to be buying into the stock market or in individual stocks. And if it's trading below the 200 simple moving average, that's when we have a bearish bias. So price broke through the 200 moving average at the start of this year, and which was around that $160 mark, and since then it has just been in free fall. It's now around that $70 mark. If you come to the daily time frame, price is below the 200, the 50 and the 20 simple moving averages. It has been trading inside this range of sorts since May, so potentially we could be seeing a base being formed before a move back to the upside. If you're looking to buy into PayPal at the very earliest, you want to see price move above the 200 simple moving average. You want confirmation of a base. This is where a lot of people go wrong. They try and predict the bottom, but the problem with trying to predict the bottom is that if we go back to the monthly time frame, there's still further weakness to the downside. It's around $70 at the moment. It IPO'd at around $40, so it could potentially come back down to that price. So there is still further potential weakness, particularly if the stock market as a whole weakens. You know, in the previous recording, I looked at the indices. The S&P 500 has only declined 25% this year. In 2000 and in 2008, the S&P 500 declined by 50%. So there's still further downside potential. However, if price is finding support and we see a move back to the upside, well, on the daily time frame, the earliest you want to be buying into the stock market, or excuse me, into PayPal, is when it moves above the 200 simple moving average. The 200 simple moving average is your indicator of market conditions. So if it's above, you have a bullish bias. If it's below, you have a bearish bias. By allowing a bit of patience, allowing for price to dictate a recovery, you then have a much higher chance of price returning a profit. Trying to jump in at this level here is just setting you up for a fall. This kind of approach where you look for undervalued stocks was made famous by Warren Buffett. Of course, Warren Buffett's done very well, but you have to remember, guys, Warren Buffett has very, very deep pockets. He can buy into a stock like PayPal, hold it in negative for many, many years before it returns a profit. Us as busy everyday people, we don't have that luxury. We want to see good, consistent growth year in, year out. And the way to do that is by looking at stocks that are performing better than the average. I mentioned this in previous recordings. The indices are an average. The S&P is an average of 500 stocks. The Nasdaq is an average of 100 stocks. The Dow Jones is an average of 30 stocks. Once the indices determine whether we're in bullish or bearish market conditions, we then want to find stocks that are performing better than the average in a bull market and weakening quicker in a bear market. So potentially we could even short the stock market. PayPal is one of these stocks that has declined so rapidly that you are better off now standing aside and looking at other stocks. So let's switch over to one of these lesser known stocks that's actually performing very well, and that stock is CI, Ciena Corporation. So I'm going to start with the monthly time frame. Looking at the monthly time frame, we know that it's got a very good history of performance. You can see, particularly from that low point to 2008 to this point here, January 2018, a significant move from around $8 to $228. So a good climb to the upside. So we know that if we get into this and if we time our entry correctly, there is good upside potential. Since this point here, it's been a little bit jerky. It's gone through an area of consolidation. It did create a new high in May of last year. Then there was another decline. Price came to around that $200 mark, created the low of last year, and has recovered since. So while the S&P 500 has been declining, the Nasdaq, Dow Jones, while they've all been declining, PayPal has tanked massively since last year, this stock has actually recovered and has moved up 43%. It is now trading around its high of last year. You can see that price attempted to break through it earlier this month. The bears have come in and pushed price back down. So it's trading around this level. What we want to see is momentum to the upside. Don't be put off by this move. When price comes to a major level of resistance, there tends to be a battle between the bulls and the bears before the bulls come in and push price further up. It just requires a bit of patience at this point. On the weekly, if I just open that up, price is above the 200 moving average. The trend filter is predominantly green with bits of grey. However, it's still trading inside a sideways market. It's just been going sideways, even though there's been a bit of a recovery, bouncing off the 200 simple moving average. Again, I've mentioned before how the 200 simple moving average acts as an area of support. Price came to that level, bounced off it. So it's really just sort of in a sideways market where it's come down, gone back up again. What we want to see is a trend. And a trend is when price breaks above this level of resistance and starts printing highs in a nice linear, neat fashion. If we go back in time, just so that I can show you guys or demonstrate to you guys what a clean trend looks like. If you look at this nice clean trend to the upside, where the 50 simple moving average has acted as support, nice moves to the upside, this is what we want to see going forward. We want to see price break out, emerge, and print a nice clean linear trend. And if we come down to the daily time frame, we can see that price is above the 200 moving average. There was a bit of a gap down. Price is finding support at the 50 simple moving average. Overall price still stuck in this area of consolidation. We want to see a recovery, a breakout, and a continuation to the upside. Once price does break out and start printing new highs, that will then be a very, very interesting stock. Stocks that are creating new highs have very little resistance ahead of price. There's very little that will force price back down. Unless overall market conditions change, a stock that's printing new highs is likely to perform very, very well, as opposed to looking for these undervalued stocks where price has to do a lot more work to work its way back to the upside. It could stay at these very low levels for months, even years, before we start seeing a recovery. Stocks that are creating new all-time highs have a very, very good chance of just shooting ahead and returning a very good profit. So there you have it, guys. Hope you enjoyed that. Hope you found that useful. Don't forget to like, subscribe, hit the bell notification. CI, ticker symbol CI, Sydney Corporation, a stock that is outperforming the market and outperforming PayPal, one that you may want to consider instead of PayPal. It's just now a question of timing. So guys, where do you go from here? Go down into the description below, click on the link. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard by clicking on this button. It will take you less than 2 minutes to complete. At the end of the scorecard, you get a wonderful report detailing your performance, but you will also get 30 days free access to the Hot Stocks Vault, where we share with you the 10 best performing stocks every single week. In addition to that, a whole host of other goodies, including 30 days free access to the 3-screen setup that I've used in this video. See you in the next recording.